Got some big movers across the market following today's jobs report. Before we get to break, let's get you some key trades for the day. We're going to do that with David Spika of Guidestone Capital Management, here to help us out. David, welcome. We appreciate your time this afternoon. Going to run through a couple of big areas here. We just talked about the banks, regionals having a huge turnaround. Should people be chasing the group? Should they go with the big players? What would you do here?
I would go with the money center banks. We like JP Morgan here. Clearly, they're one of the leaders, if not the leader in the space. Largest deposit base in the country, just got bigger with the acquisition of First Republic Bank. Great wealth management business that also got better from the acquisition of First Republic. Great diverse revenue sources and a very solid leadership team led by Jamie Dimon, who's been through financial crises before and knows how to weather them.
All right, let's move on, David, here to Apple, up more than 4% in today's trade. Overall sales falling for the second quarter in a row. But those stronger than anticipated iPhone sales seem to be exciting Wall Street. What do you think of Apple?
Tyler, I think you've got to own Apple. The run it's had is ridiculous, but Apple and iPhones have basically become consumer staples. I think people would rather give up their left arm than give up their iPhone. So if we go into an economic downturn, they're going to continue paying those bills. They're going to be buying new iPhones. And Apple has great cash on the balance sheet. They raise their dividend yield. They raise their buyback. And you want to own high-quality, visible earnings growth in an economic slowdown. And that's one of the reasons Apple should be in your portfolio.
Yeah, Warren Buffett said much to say. I expect we'll hear him echo that tomorrow as well, David. Let's turn to Tesla. Shares are up more than 4% today, apparently because they raised the prices of premium models S and X in China, where they've said to face maybe more competition than any other market, BYD and others. Does this tell you that they have more pricing power and market strength than we previously thought? Would you be a buyer here?
No, we're not a buyer of Tesla. Their pricing strategy is one of the reasons we don't like it. They're clearly sacrificing margins and profit for volume, which is a strategy that we are not a fan of. And we're also concerned if Elon Musk has his eye on the ball. Clearly, with what's going on at Twitter, he's a little bit distracted. And as you said, there's a lot of competition in the EV space. So that's not a name we'd want to own today.